What's up everybody, Crypto Noah back with another video trying to bring you the highest quality yield farming content so that you can generate passive income on whatever assets you're bullish in a risk adjusted way. In this video, we're going to be covering Raydium. They are a decentralized exchange on Solana that allows concentrated liquidity. I'm going to explain what that is. We're going to go through their docs. We're going to go through some of their pools. I'm going to show you some Solana yield farming strategies. And then at the end, I'm going to tell you if I would use the protocol or not. So without further ado, let's get into the content. And before we start, I do have to say this should not be taken as financial advice, and always do your own research and use this channel as a starting point. So, all right, so let's get into it. All right, so here we are on DeFi Llama, and you hit categories and you go to Dexus, you scroll down and you can see that Raydium is number 14. They've had slight increase in the past pretty much month overall. And they have a TVL of $141 million. We go ahead and click on it. Oh, it shows you the FTX collapse. That's cool. You can see that, pretty much the TVL in all of DeFi has been rising lately. It's been rising lately. People are, open to providing liquidity again. All right, so now let's hop into these docs. It says, so what is Raydium? Raydium is an automated market maker built on Solana, which leverages a central limit order book to enable lightning fast trades, shared liquidity, and new features for earning yield. So they go to talk about what makes Raydium different. So it says other AMM dexes and DeFi protocols are only able to access liquidity within their own pools and have no access to a central order book. Additionally, many platforms run on other blockchains such as Ethereum, where transactions are slower and gas fees are higher. Raydium offers a few key advantages. One, faster and cheaper. Raydium leverages the efficiency of the Solana blockchain to achieve transaction magnitudes faster than Ethereum and gas fees, which are only a fraction of the cost. Another thing that makes them different, a central order book for ecosystem-wide liquidity. So it says Raydium provides on-chain liquidity to a central limit order book, meaning that Raydium allows access to third-party order flow and liquidity on the order book. And the last one is a trading interface for traders who want to be able to view trading view charts, set limit orders, and have more control over their trading. All right, you go to wallet, SPO wallet. It tells you the wallets that you need to use in order to interact on the Solana chain. So you have Phantom, Soulflare, and Backpack are their top three. And they offer how-to guides on how to pretty much do everything. But like I said, we're going to do a platform walkthrough, so I'm not going to go through all this stuff. All right, now let's hop over to their concentrated liquidity feature. For those of you who are new to the channel, concentrated liquidity allows you to provide liquidity in the form of pairs in a specified range. For example, let's say you want to provide liquidity on Raydium for Solana USDC. That means you get to specify where you want to provide your liquidity for a certain price range. So like, let's say you want to only provide liquidity when the price of Solana is trading from $200 to $100. That means whenever people are trading within that pool and the price is within your range, whatever percentage you make up in the pool, let's say it's 100K in the pool, you put in 10K, 5K of USDC, 5K in Sol, you make 10% of the trading fees. This makes your capital more efficient versus having to provide liquidity from whatever the price is, because sometimes your liquidity won't be used. And if you want to learn more concentrated liquidity strategies and be able to deploy the same strategies that large market makers deploy in traditional finance, visit knowitals.xyz or just click the link in the description, book a free strategy session. One of our team members will talk to you and see if our program is a good fit for you. I digress. Let's get back into the docs. So they pretty much show you how to, deploy a concentrated liquidity pool. The important note here, if your NFT is lost, sold, or burnt, the liquidity it represents will also be lost. So just like Uniswap, when you provide liquidity via concentrated liquidity, you don't get like an LP token, which is whatever that blockchain standard is. It's actually an NFT token that represents your liquidity, and that's what they're talking about here. All right, this part's important. It talks about the estimated APR calculations. So it says an accurate APR can be found for an individual tick based on trading volume within a time period. However, extrapolating this to all of the ticks in a pool and among multiple liquidity positions is extremely complex. Traditional constant product pool APR calculations cannot be applied to concentrated liquidity pools. Projected returns for concentrated liquidity management positions should be considered as an estimate at best. And then they go on to talk about the three methods that they use for estimating APR for concentrated liquidity pools. This is important because when you go on their website and you're looking at the yields for concentrated liquidity, it's no way that they can give you the exact yield, because you get to pick your range and everyone's range is a little different. It's kind of like a competition that the most efficient ranges are the ones that are getting paid out. So as you're going on these and you're looking at this APR and you're like, oh, 500% or whatever it is, don't get super excited. Just know that this is an estimate and it depends on your range. You need to track your own specific pools. They also teach you how to provide liquidity the standard way. And, it gives you all the directions. Like I said, we're going to go through a platform walkthrough, but it's important to note this here. When you add to a pool, you'll receive LP tokens. For example, if a user deposited Ray and USDC in a pool, you will receive Ray USDC or LP tokens, not an NFT. This is important to note. These tokens represent a proportional share of the pooled assets, allowing a user to reclaim their funds at any point. Okay, so I want to give you guys a visual on the difference between concentrated liquidity and traditional AMMs. If you're providing liquidity and concentrated liquidity, the impermanent loss is a little different. I'm not even talking about the capital efficiency. So if you're in Solana Ether, right, and Solana's outperforming Ether and it goes out of range to the upside, you're going to be in 100% Ethereum. And if it goes out of range to the downside, you're going to be in 100% Solana. The difference between that and traditional liquidity providing is that if the position starts to go up, it's going to sell off your Solana to buy more ETH. It's pretty much selling off the loser. It's selling off the winner to buy the loser. And it's always going to keep it even. And if it goes down, it's going to be selling off your Ethereum and buying Solana. So whether if you're providing liquidity concentrated or the standard way, I still don't recommend providing liquidity for anything you don't mind holding on its own. Because if you are doing concentrated liquidity, you can end up holding 100% of the losing asset. And if you're doing the regular way, you'll hold even amounts of whatever the asset is. But if that asset goes to zero, or let's say it drops 90%, you're gonna hold, and you have like a couple bucks left. You're gonna have a couple bucks in the good asset and a couple bucks in the shitty one. But most of your good asset will have been sold off, because it's always, the smart contract's always going to make sure you have an even amount. Now let's go to the firm page. This is important to talk about, because when you provide liquidity the traditional way and you get an LP token, you can go to farms and you can actually stake your LP tokens to get an additional yield. You can't do that with concentrated liquidity. All right, this outlines all of the fees. So it pretty much like tells you the fees that you'll pay for swapping and as a liquidity provider. So if you're considering providing liquidity, I would definitely give this a read. And also, like we always say, when you are trusting your funds to a smart contract, you want to make sure they're audited. Raydium has went through, it looks like 6 audits here. I definitely recommend you guys go through them, but from what I've seen, they've had things that they had addressed as vulnerabilities, and they did come back and fix them. So that shows that they're pretty serious. They also have a bug bounty program where they'll pay you. It talks about critical, high, and medium. This is what you get paid if you find faults in their smart contracts. It shows that they're serious about the development of this platform if they're paying people to find errors. All right, so now that we went through all the docs, let's do a platform walkthrough. Let's look at some of their pools, go over a Solana yield farming strategy, and then at the end, if you stick around, I'll tell you if I would use this protocol or not and why. All right, so here we are at Raydium.io. Pretty standard swap interface. Let's go to liquidity, and this is where you go to add liquidity. And now this is just the traditional liquidity providing, where you do half of the asset. Then you go over to concentrated liquidity, and let's check out some of these yields. So you can see right here off the bat, you got 137% and Solana USDC, which is pretty good. Let's sort by APR. Okay, some of these are just up the wazoo here. Let's get down to earth. See if we can find something that's legitimate. Guys, I'm not a big Solana bull, so I don't really keep tabs on what's going on with Solana. So if you see a project that is to your liking, maybe it's something to look into. Okay, you got Sol Ray, 378% APY. Yep, nothing looking too crazy. Maybe I shouldn't. Okay, Solana Orca, 215%. These yields don't look bad. I just don't know what the project, just don't know what all the tokens are. Let's hit Sol USDC, create position. It's like Uniswap. You just have to go on your chart and know what your numbers are. You squeeze them in here. This is the liquidity amount, and this is where most of the liquidity is. This line right here represents the price. It gives you your estimated APR. You put your balances in here. Obviously, you have to connect your wallet, and then you just enter into the pool. Let's go on to farms and see what they got here. So if you provide liquidity and Ray USDC, this looks like this is all of them here. It's only 3. You can stake your LP token, and it looks like you can get an additional 23% APR in addition to whatever fees you're making in the pool. I imagine it wouldn't be as much. Well, actually, I won't say that. It depends on how volume is. I'll just leave it at that. And then if you want to stake your Ray, you can get a 6.7% APR right now. It shows the total staked. And I'm not sure if the longer you stake, the higher your APR. All right, guys, so now let's look into some Solana Uniswap strategies that you can deploy if you're bullish on Solana. So whenever I'm providing liquidity, I always have to keep risk management in mind. I like to look at how altcoins are performing in comparison to like their blue chip competitor. In this case, that would be Ethereum because it's the top layer one. So you have to think to yourself, am I better off just holding ETH? And the reason why I say that is because Ethereum, I think, is going to 3 to 5x in the next bull market. And that's pretty safe to assume. But these other ones, some of the other ones, you can't be as convicted. So it's like, am I just better off holding ETH? So I like to look at ratios. So this is Solana versus Ethereum. When the chart's going up, that means Solana's outperforming ETH and vice versa if it's going down. So as you can see, for the past month or so, Ethereum's been outperforming Solana, and this is kind of like breaking down. You see the red trading volume. So what I would do is provide liquidity from this range, top of this here, and then maybe to the 62 EMA. The reason why is because I think we have one more correction to go. If you guys follow me on my channel, you've heard me talk about this. Follow Know It Owls as well. We give a more global macro perspective on our view of the markets. This channel is more about strategies and protocols, but I think we have one more drop down to go, and I think Solana is going to drop down more than ETH. So if you're bullish on Solana, you could do a concentrated liquidity strategy where you enter in from either current price, or you can enter in a little higher just to give it room to breathe in case it goes back up. And then you can, if you want to buy the dip in Solana, you can wait till price gets to the bottom of the range. You'll be in 100% Solana. And now you just made passive income buying the dip. All right. And in the bull market, like let's say it gets down here, a good strategy would be you can either hold the Solana or wait for the price to go back up, or you can stay in the position and add more ranges. Because I do believe in the bull market that Solana is going to outperform ETH. And also, some of the best yield farming strategies to deploy in a bull market is volatile pairs like Solana and ETH, because they're both going to go up in a bull market. Albeit I do think Solana is going to go up more in this particular bull market, but they're still going to both be going up. So that way your impermanent loss won't be as crazy. And I always recommend like having a plan before you get into buying a project, but also a plan to get out when you're entering into a firm as well. And we teach you how to do that at Know It Owls like a professional, like I said earlier in the video. So this could be a good strategy to deploy. Let's look at another one. Let's say you want to do Solana USDC and you want to do concentrated liquidity. Same thing here, like say literally same exact thing. I think we're going to come down to around this area. So I'll put a thing here. So you can provide liquidity from the top of this range all the way down, and you can literally get paid passive income to buy the dip if it drops again. The market has to cool off a bit, and you can already see that things are starting to roll over. We got the Bitcoin ETF, but equities are at an all-time high again, certain indexes. So I think the Federal Reserve is estimating that they're going to start lowering rates in March. Every time the Fed has lowered rates, that's when we see the bottom, as you can see from this chart here. So I think that when they do start to lower rates, we are going to have an opportunity to enter into some positions at lower prices in around between February and April, in my opinion, if I had to estimate. I don't have a crystal ball, so obviously take that with a grain of salt and do your own research and come up with your own predictions as well. All right, so now we looked at the pool, looked at some strategies. Would I use Raydium or not, and why? To be honest, I wouldn't. And the reason why is because if I was, I'll put it this way. If I was bullish on Solana and if I was like using Solana, I definitely would use Raydium. I don't have any problem with what they're doing. All right. It's just, it's kind of like a really nice room in a shitty New York apartment. It's like, I like how the room looks. Like I would stay there, come visit, but I would never live in New York just because it's just not my vibe. And that's kind of how I am with Solana. I'm not a big Solana bull. They're a VC chain, and not a lot of new innovation has happened on the chain other than like meme coins and stuff like that. So with that, I like to conclude this video. Guys, if you want to support this channel and you like the kind of content I put out, I ask that you consider subscribing, drop a comment, like, share with a friend. Let me know, like I said, what you want me to cover next. I am here to serve you guys to ensure that we can generate passive income on the highest quality cryptos that we have in our portfolio in a risk-adjusted way. And like I said, here at Know It Owls, we have a mastermind of people who are like-minded who want to do the same thing. So if that interests you, like I said, click the link in the description and book a free strategy session. But with that, I conclude this video. I thank every single one of you watching. I love all of you, and I'll see you in the next video. Take care and have a great week.